Good morning friends, welcome to the point. In this video we will discuss about the various types of deposit accounts that a bank offers to its customers. So first we will start with the major broad classification what bank's account can be classified into. So first one is the demand deposit and the other one is term deposit. So as you can make out from the name that the demand deposit means anything which can be withdrawn upon the demand of the customer. Hence the name demand deposit, because they can be withdrawn anytime on the demand. Whereas the term deposit accounts are those accounts where your money is locked for a certain period of time and you cannot withdraw the money before the lock-in period is over, or if you want to withdraw the money before that, a penalty is levied. So there is a lock-in period in the term deposit account. So we'll start with there is further classification of these demand deposits. One is saving account, the other is current. In case of term deposit, it is fixed deposit and recurring deposit account. Now moving on, so we'll start with the demand deposit account. One is saving account. Saving account, as the name implies, is opened by an individual or jointly by two people with an aim to save money. So it can either be opened by one single person or two or more people can come together and jointly open an account, which is called joint account. The main benefit of opening a saving bank account is that banks pay you interest for opening this type of account with them. Yes, certainly, because you're parking your money with the bank for whatever time it is, bank will pay you interest on parking the funds with them, because on that funds only bank will be extending loan to the people approaching them. So they are using your fund, so definitely they will pay you some return on it. Given below are the features. There is no limit to the number of times the account holder can deposit the money in this account, but there is a restriction on the number of times money can be withdrawn from this account. Since it's a saving bank, so bank will put no limit on the time that however many times you want to deposit the money, you can deposit there. But on the withdrawal, definitely there is a limit, because it's a saving account and is opened with a view or with the motive of saving the money. The rate of interest an account holder gets varies between 4 to 6% per annum, and it varies from bank to bank as well. There is no minimum balance that needs to be maintained for this type of account, and it could be anything which the customer wants to save. The saving account holders get ATM, debit, RuPay card if they want to, so that they can withdraw the money as per their wish. So these were the broad features of a saving bank account. And also you have to remember the motive. The motive is to save money. So the motive is saving. Yeah. Now moving on to the next account is current account. Now, if you remember in the previous slide where we were discussing the saving account, we discussed there was one limitation in saving bank's account, that is there is limitation on withdrawal of money. But so that limitation has been overcome by the current account. So there are let's suppose if I am doing a business and I want to withdraw money as many times as my business demands. So what type of account should I open? Saving account cannot provide me with the purpose, because there is limitation on withdrawal. So that purpose is solved by current account, as there is no limit on withdrawal of money and I can withdraw any number of times as I wish to or my business demands. Big businessmen, companies and institutions such as schools, colleges and hospitals have to make payment through their bank accounts. Since there is restriction on the number of withdrawals from saving bank account, that type of account is not suitable for them. They need to have an account from which withdrawal can be made any number of time. Banks open a current account for them. So that is the facility that banks provide to such kind of people, that where the money can be withdrawn any number of times. Some of the features are no fixed number of times that money can either be deposited or withdrawn. As many times you want to deposit the money or you want to withdraw, you are free to do in case of current account. This type of bank account does not have any fixed maturity, yes, as we studied, because it's a demand deposit account and there is no interest that is paid on such account. Yes, why? I'll explain you. Let's suppose on 1st of the month you deposited 25,000, right? And the next day you are withdrawing 18,000 on 2nd. Now on 3rd again you are withdrawing 7,000. On 4th you are depositing again 10,000. Now how do the banks calculate interest on it? Because every day the balance is fluctuating, so the banks do not provide interest on such accounts since the balance is not fixed and it is fluctuating on day to day or whatsoever transaction basis. Moving on to the next type of account, which is fixed deposit account. Now this comes under the category of the term deposits. Earlier we have studied the demand deposit account. Now from here we'll study the term deposit accounts. So the first one amongst it is fixed deposit account. FD or fixed deposit account is a bank account that can be opened in any public or private sector bank. Important features are as follows. It is a one-time deposit account and one-time take-away account. Under this type of account, the account holder needs to deposit a fixed amount of sum as per their wish for fixed time period. Now what happens is fixed deposit account that there is one certain amount which you decide, but the limitation is that you have to deposit the amount at once, and you can withdraw the amount only at once after the expiry of tenure for whatever period you have logged in for the amount. Unlike the case of saving and current, where you can just withdraw as per your wish. In case of fixed deposit, as the name suggests, it is fixed. You cannot change it. It is fixed or logged for a period of time, and so that is why it is one time deposit. All of money you are depositing at one go, and you are withdrawing all the money at one go. The amount deposited in FD account can only be withdrawn all at once and not in installments. Bank pay interest on the fixed deposit money? Yes, because you are parking your funds with bank for a certain period of time, and using that funds, banks are extending loan to the people. It is using your fund, hence they will give you some return on it. So there is interest on the fixed deposit account you open. The rate of interest depends upon the amount you deposit and for the time duration. So let's suppose if your money is parked for the longer period, you will get definitely a higher interest rate as a return as compare if you deposit the money for shorter span of time. The rate of interest also depends on the same. If as I told you, if it is for the longer period, so the rate of interest will be more. If it is for the shorter span, yes, it will vary and it will be less. Full repayment of the account is available before the maturity of FD. Full repayment is available how? On the payment of penalty. Though withdrawing the amount before the maturity date is not encouraged by the bank, they really don't want you to withdraw the money. They want some certainty that so and so fund is logged in with the bank for a certain period of time so that they can use it. But in exceptional circumstances, you can withdraw the amount by paying some penalty over the amount withdrawn. But also you have to withdraw the whole amount at one go, even if you are withdrawing before the maturity date. It is not that you can withdraw a part of money. In case of you're breaking the fixed deposit account, you have to withdraw whole of the money. Moving on to the next and the last account is the recurring deposit account. Recurring deposit account, or RD, is a form of account where the account holder needs to deposit fixed amount every month until it reaches the fixed maturity date. So recurring, as the name suggests, recurring means which occurs again and again. So here what you do with bank is you open an account and you enter, or you just choose a plan wherein every month you have to deposit a fixed amount of money. Let's suppose I have opened an account with SBI, the recurring deposit account, and decided to deposit 1,000 rupees per month for next 3 years. So now this is what? This is recurring deposit. Why? It is reoccurring every month and it will happen till next 3 years. So this is recurring deposit. The features are: an individual or institution can open a recurring deposit account either separately or jointly. Like you can open it individually, or if you want other people, let's suppose you and your mother or your father wants to open this account jointly, that you can do that. So periodic or monthly installment that's need to be added can be as low as 50 or may vary from bank to bank. So minimum amount that you want to fix with the bank is ₹50, and banks can also place certain limitation that the minimum amount should be so and so. It varies from bank to bank. There's no hard and fast rule related to it. The range of months for which RD account can be opened varies from 6 months to max of 120 months. The interest rate varies depending upon the bank you choose to open an account with. So banks, so again, there is no centrally regulated interest rate that you will get on recurring deposit. You will certainly get the interest on the amount that you have parked with banks under recurring deposit account, but the interest rate will vary from bank to bank. Bank often offers attractive rate of interest to lure more customers towards them. So it's a competitive market, right? So SBI, let's suppose, will offer maybe 4%, or HDFC will offer 4.25, and any other bank will come and say I'll offer 4.35. So it's a competitive market, and the banks keep changing them in order to lure more customers to open RD accounts with them. Nomination facility is also available for RC. So this is RD account. So what is this nomination facility? Let's suppose this is in case if there's something wrong happens with you while opening an account, you can provide the name of the nominee to whom that whole money will go. So that is the nomination facility. That is, you are adding nominee to the account, that after you the amount will go to your nominee, which could be any person as per your wish. So these are the 4 accounts which we have studied: 2 under the demand deposit system and 2 under term deposit system. In demand deposits, you can withdraw and save the money as per your wish, and whereas under this term deposit account, you have to deposit the amount at one go and withdraw also at one go. So yeah, with this slide, I am signing off for the today's video. Stay fit, stay at home, wear your mask, don't move out of the home much. Thank you so much.